But let me now focus back on earnings and welcome on board Guruprasad Srinivasan, the CEO at Quess Corp, and Kamal Hoda as well, the CFO, joining in on the show right now. Gentlemen, both of you, good to have you in ET now. Kamal, if I could start off the discussion with you, what's leading to this higher EBITDA growth? The cash burn in Foundit, has it reduced?
Yeah, the cash burn in Foundit also reduced, but that's not the only reason for EBITDA to go up. There have been a lot of operational synergies. As you can see, the EBITDA in all four of our platforms have gone up. So the WFM EBITDA has gone up by 5%. GTS, the EBITDA has gone up 4% quarter on quarter. OAM, the facility management business, the EBITDA has gone up 14% quarter on quarter. So yes, there is a reduction in cash burn in Foundit, but that's not the only reason. We good growth from all our four platforms.
Okay, point taken. You're also expecting break-even in the Foundit business by the end of this financial year, right? That's at least was the stated goal earlier. Are you on track?
Yeah, so we have, the plan is to break even by exit of this year, and we are very much on plan. Foundit has had a 35% sales growth quarter on quarter and year on year. And there are a lot of initiatives that have been taken in Foundit to look at our cost base, our marketing costs. The new product, the development cost of the product has been largely through. So we expect Foundit to break even by end of this year.
Right. The other thing I also wanted to talk about was exactly, if Mr. Guruprasad, I could address the question to you, that similar to the previous quarter, BFSI, retail, manufacturing has been leading the growth. But any green shoots that you spot when it comes to IT hiring?
So, if you look back specifically for quarter two, most of the high mandates have come from specifically from manufacturing, retail, and e-commerce. The season being around. The substantial quantum of mandate has come from these four segments, and we are seeing a similar kind of trend continuing even in Q3. But just to bring back the conversation, the Q2 has been really a good quarter for us. Our revenues year on year has grown by 11%. Our PAT has grown by 79% year on year. A clear call out here is our higher margin businesses, which is GTS and OAM platforms, have started delivering good results. And in the sense, the kind of EBITDA growth that you see year on year between these two platforms are about 23 and 26% with regard to the EBITDA growth. It also brings in a kind of non-linear contribution to EBITDA. As you know, they are higher, they command higher margin and good international revenue mix that comes into these two platforms. So, which is what has led us to where our PAT and our EBITDA growth of 21% year on year for Q2.
Guruprasad, but how has the North American market performance been? Are you confident of a break-even at least in the second half of the year?
So North America, we started our operations, took Q2 of FY23, and there are some headwinds there in terms of in terms of the market reach and reaction there. However, we are by Q4 we should be in a break-even stage. So we anticipate to be in a break-even stage. We have taken a lot of action in terms of the size of customer that we are onboarding and the kind of delivery structures that is required. And we have also done some optimization to keep it lean so that we don't burn too much of cash. At the same time, we focus to be a kind of break even by Q4.
Right. Earlier the WFM segment was negatively impacted by a slowdown in permanent hiring. Has that improved?
With regard to the permanent hiring, I would say slightly better than what it was in Q1, but it is still not as even expected where it is supposed to be. But we'll not be in a negative zone there. We'll be in a break-even zone in terms of our revenues and costs are concerned. Again, we have taken drastic action in terms of optimizing costs there and ensuring the business performs to its level of revenue and cost at break-even zone. Coming back to IT, most of our demand are coming from GCCs, as you rightly said. And specifically, IT services are still not hiring. We did anticipate some level of mandate was supposed to come in by Q3. We are still not seeing that moment yet. So it's fair to say that most of the IT staffing growth would come from GCCs and other non-tech platforms.
And Guruprasad, how has the growth been and the trends been in the facility management business? Because there seems to be a bit of uptick in the competition there as well.
So facility management, if you look at by EBITDA contribution, we have been able to grow about 26% year on year. It's also a high margin business, delivers about 5%, close to about 5% EBITDA for us. The food business, which is almost about over 10% of our overall OEM platform, is doing substantially well. The return back, the return to campus back, and universities are open. The back to campus program is online, and hence we are able to realize much better bottom line realization in terms of the food business. Overall facility and security businesses we have done in terms of restructuring the customer portfolio mix. So with action on both cost side as well as the new set of revenue accounts that we have signed, we have almost signed about 22 new logos in Q2, which will now start real much value for Q3 and Q4 and onwards. So overall, good to see this particular segment coming back to its kind of expected growth after a few quarters that has passed by.
Right. So any plans of taking a price hike in the near term?
See, price hike is something we work with every contract, because contracts are signed across platforms, are signed between 1 to 3 years, depending upon the type of businesses and platform that we are into. Whenever there is an extension of contract comes, obviously we will those conversations would happen and in line to the inflation and of course the customer wallet share, the way business quantum that we operate into. It depends on all of that, but of course we continue to strive having those discussions with our customers.
Lastly, before I let you go, Kamal, there were some concerns on the street regarding some income tax litigations, etc., that were underway as well. Any update on that front?
Yeah, so no significant change from the previous quarter. For 2 years now we are in tribunal, and for 1 year we are in the DRP with the submissions. There have been no change of grounds from either our side or the department's position, and we'll continue to take the right advice from our counsels, and we are very confident that these are legitimate claims, and we'll continue to defend our claims at all levels wherever it is being heard upon right now.
Both of you, thank you so much for taking the time out and joining in today to talk about your earnings.